Hello everyone, welcome to Let's Go Money. Before we go into the details, if you have not watched the introduction and money management videos, please do. It has the basic concept of wave theory and the indicators we use. The money management will give you an idea of how to manage the trade. The link is given in the description. Today, we are going to look at the trade idea for Axis Bank. So, since we are taking this trade for the first time, I will go through the chart in a bigger time frame. Basically, we'll start with the weekly time frame and then move down to daily and hourly. Most of the trades what we take are all on the hourly chart. But just for the understanding, I like to explain how an impulse and a correction is calculated or looked at based on the Axis Bank chart. So if you look at the weekly chart, you can see there are majorly two waves. So the first one is this impulse followed by a correction, and this is the second wave with an impulse followed by a consolidation, and then this is another wave down to complete this pattern for the second wave. Then the third wave has started. So how do we all calculate this? Basically, for every wave to complete, you will see a correction of two waves or two impulse down. So let's take the first wave. Let me draw a Fibonacci as we always do for most of the waves when it occurs. So this is an impulse which you can see without any problem, followed by a correction, then we have a consolidation wave up, and then for another correction down where it completes the full pattern, and then it starts its trending up for the next wave. And particularly this pattern is called a regular flat. What it means is, when there's an impulse, we call it, let's say I'll show this is an X, this is A, this is B, and this is C. So when you have a B lower than X and a C lower than A, we call it as a regular flat. This is one of the pattern. So let's move on to the next wave. So the next wave, what happened is, you have an impulse followed by a correction. So before that, let me move this. Let's take out this Fibonacci from that impulse, as that is already complete, and we have the next impulse in play. And here, let's say this is the impulse followed by a correction which comes close to the Fibonacci range, and then the wave has started its consolidation on the upper side where it reached the higher point, and then it has another impulse down where it could have been here, as it would have stayed here and it would have gone up. That's a possibility, but it has done a longer impulse down which has actually reached its retracement range for this Fibonacci. And this type of pattern is called an expanding flat. Basically what happens is, an impulse, which is X, followed by A, which doesn't change, then a B happens above X, and then C happens below C, which this is called an expanding flat. This is another type of pattern. And once this is complete, we have a pattern forming, and to start the next wave. So we are in the third wave of Axis Bank in the weekly time frame. So when can the third wave can stop? We don't know yet, but this is the full second wave, and our expectation is at least it will reach to this point as a target. That is our first target in the longer time frame. So let's go to a daily to find out but what part of the wave we are in, and is it okay to take a trade right now. Then daily, we can see inside this impulsive wave we have multiple patterns. So basically in this wave we are in this impulsive wave of weekly. We have daily two waves already has happened. The first one is the impulse followed by correction, and then consolidation and a correction to complete the first wave. And this pattern is called the running flat, where we have an impulse is X followed by A, then B crosses the X but C doesn't cross the A, and this is called a running flat. I think you have learned 3 different patterns today, and this is the third pattern which you understood. So now this is the first wave, and followed by this is the second wave. In the second wave there's an impulse followed by correction, again there's a consolidation, and then there's another correction. Again this is also a running flat, and right now it has started its up move with a running flat here or further up. And in the time in this time period, let's draw Fibonacci from the previous low to find out where it can minimum reach. So our expectation is this as a target point for this wave. That is at the daily. So coming back, let's change this color to orange, and this is yellow to show the lower time frame. Let's go to an hourly. So where we are in hourly, so same thing, you have completed this pattern, and now we are in upward time frame, and you can see this is an impulse followed by correction, then it is gone up for consolidation, and I'm expecting another correction before it starts. So the correction can happen here, or it can actually continue some more, like let's say this, they can go here, then do a correction and then go up. It can do either way. So it's our risk appetite to see you want to enter here or wait for the correction to complete if possible, and then take the trade. So this is in the hourly entry, and now if you see here, the hourly movement can at least be starting from here. Let me change a different color to show. So our target, so it went up, came back to this range retracement, then it is starting up, and our expectation is to reach at least 932. So our target prices are, there are 3 different target zones, and mostly 2 of them are hitting in this zone, and the third longer time period actually it's here. So our trade setup will be, we are not expecting anything to drop down, so the trade setup I'm going to show. So entry point at this point, and not below this line, so I'll just keep it here as stop loss, and then our first trade expected to be around 930. So this is our target, and on a daily the target will be, so let me draw another target from the same point, and this is going to be here, that is our second target. Okay, now let's add this trade to the spreadsheet. So we have taken the trade on 17th, and that's for Axis Bank, and the entry point is 726 rupees, and the stop loss is 50 rupees. So if it's 50, I think with the risk appetite what we have, which is 0.5% of the trade, which is 5,000, so we will see around 100 stocks. If we put 50, yeah, you will have, we can actually trade 100 stocks for this lot, and we have invested 72,000 today. Yep, so we will track this trade in our weekly trade analysis and see how it goes. Thanks for watching. I'll see you in our next video.